Conditions majority bearish at 9 and 5. S&P futures down slightly this morning. You can see 0.85 to the downside, running into resistance area, this supply location at a 618 retracement of this counter trend here. Looking at this swing high low point, this swing low point, counter trending this direction, and market's done a pretty good job of pushing back through a lot of these levels. 50% now back to 618 and inside of a pretty significant supply block location. These are areas where the market started selling off, and we're kind of back to that location now, and I've seen compression and trend right here. This could be an area where we get rejected from this location, start to pull back. I'd be watching if that starts to happen for support at this 50% retracement. That's the 5,500 level on S&P 500. We'll see if that ends up becoming an area of interest right here if we do start to get a little bit of softness and weakness back into the markets right here. Let's take a look at the breadth of the market. We're seeing sitting at 53, so we're back up, close to equilibrium there on stocks above, in the S&P 500 stocks above their 50-day moving average, and bouncing off of some of those really deep lows there around that 10 level, and now we're just back up to about halfway. So we've had a decent rally, but it's been interesting that we just haven't had it. A lot of these stocks have been so deeply oversold that they're just barely catching up. So we'll see if that becomes the norm or if we're going to get rejected again by price action and start to move back to the downside. We're seeing volatility pick up here just a little bit, up 5% as of this morning. That's the VIX, watching to see if we do get some support right here and start to push up and volatility starts to come back into the market. We're at an area now where things are quiet enough in VIX that we could get a push back up again. If things turn out to be a little bit more bullish, this will continue to slide and get back underneath that 20 range, and that can be an area where we can look for a little bit even more stability in the overall uptrend. SHY, we want to see SHY continue to do what it's doing, and that is push to the upside. We want to see that short-term bond price continue to move higher. That means that the yield on that bond price is going to be moving lower, that 2-year note moving lower. That's what we want to see. Ultimately, this is the trend of the last couple of years. We went from kind of those real COVID lows, rates zero essentially on the short end of that yield curve during COVID, and then we've got a real big spike in rates, and just to defend or fight off the inflation that started to happen because of those low rates, so much money in the system, and so now the scenario is watching to see if we've had an inverted yield curve, meaning that the 2-year and the 10-year. The 2-year was higher than the 10-year for a little while, so it's not inverted any longer, but it's still relatively high, and we want to see the 2-year crater. Okay, we want to see it come way back down again. It may hold at levels right here, or we want to see that the other thing that can happen to create a little bit of widening in that bond yield spread is to have the 10-year increase and the 2-year stay where it's at. And so that could be a scenario as well. But we're sitting right here at these upper levels. Let's look at TLT. TLT, we also want to see it turn the corner and start to move higher, but it may happen a little bit slower than the short end of that yield curve, SHY. Okay, TLT. Let's look at the 10-year actual yield itself, sitting back at 433. So getting some bullishness coming back in. We've shifted back to majority bullish. When we get these compressed trends like this and it's really tight like that, one big day or two, one direction or the other can flip us. And so just a huge amount of uncertainty right here on rates, and we're getting the big spikes, the big sell-offs. Now we're getting some support coming back into rates. We'll see if that holds and if this overall uptrend remains intact for the 10-year. Dow Jones Industrial Average, let's take a quick look here. We're also running into that 618 location, some supply running at 418 on Dow Jones Industrials, 9 and 5 on the majority bearish setup right here. Triple Qs, tech names running back into resistance here as well. 618 location, that counter trend, supply block, compression and trend, a little bit stronger trend here in tech, but it's it's a little bit more volatile. Those trends are moving a little bit more reactive, a little bit more quickly than S&P 500. The Russell 2000, let's take a look here. We saw some pretty decent strength here off of some of these lows, getting some demand, pushing us back up into that 203 range to about 200. We're at 50%. So this is a market that has been really lagging everything else. Everything else is now pushing up into that 618 counter trend location. We're at 50% on Russell 2000. USO having a lot of volatility still right here, majority bearish and expanding that trend, and watching to see if we come back down and touch that $60 demand location. You can see that on the weekly time frame. This is an area that we could certainly get some demand in oil, some support, pushing that back to the upside, and that is pretty volatile right here as well. Gold also getting some volatility. We're at the upper end of this long-term weekly time frame. We've got a really expanded trend as we're really fanned out this direction. Same on the daily chart here as well, but it did find a little support here at that 236. Let me grab this low point here, and bouncing right at that 299, 236 location, and back off to the races again. Here we go. Okay, so this is still in strong momentum, finding the support where we would expect it to be found, and starting this overall march to the upside. If we do get, gold pushing higher, equities pushing lower, watch to see if we get, anything that maybe looks and feels like some panic coming back in again. That's yet to be determined. Nonetheless, whether it's panic or not, we're still getting support and still inside of that overall bullish trend. But as we can see, the upper end of that trend, what's the probability that we can continue to go at this magnitude, at this steepness of trend? It doesn't last forever, we know that, and but as long as it's continued to move higher, there's still potential trade opportunity there for now. SLV, silver, seeing really not a lot of activity there as well. That's bouncing pretty decent this morning, up to 30. We could get some support. If we get a decent breakout in silver, it's been compressing right here. This weekly time frame is actually quite bullish. We can see this swing low point. We're finding support right at the 236, which is also this breakout location. Okay, so keep an eye on silver. Silver's got a little bit more price expansion opportunity than gold. Gold's already had such a big, wide expansion, particularly on this weekly time frame. It's already there, but it's inside of that momentum zone. Keep an eye on SOV if you're looking for commodity space still. The dollar DXY, as it's moving lower, gold has been moving higher. So the dollar's been retracing, counter trending back up to momentum or within bearish momentum. Okay, the momentum zone works the same way to the bearish side as well. We counter trend up, hit that level, continue. If we're in bearish momentum, which gold is still showing that it's in bullish momentum, the dollar may still be in bearish momentum to be aware of. And that the bond yield curve, we're sitting at 0.53. You can see we're expanding. We want to see that trend continue to expand. A healthy yield curve is going to look a lot wider than this. Okay. This is what a healthy yield curve can look like. This is back in 2008. This was the 2007 and 8 lows as it started to move higher. Okay, we want to see that continue to happen. That's got to be those adjustments between the 2 and 10 year. A couple of stock ideas. Let's jump back here. And not a whole lot in the scan today, but you're seeing in WN, we're seeing natural gas, anything to do with gas distribution. We're really seeing some nice moves there. Looks like that one's going to gap up to 44, but a nice move, big volume, increasing trend at the momentum location. Nice looking setup there on NWN. A couple of others that were in that list. We looked at Take Two. Not as clean of a pattern, but it had pretty big sell-off, trying to find some support right there. As of yesterday's move, that bounce and move back up there again. Not a whole lot. In fact, this is kind of a secondary list of all of the trades. There's actually nothing in the new buy list this morning. So we're seeing a lot of stocks maybe tapped out in this trend currently, and we're running into some resistance right here in the market as a whole. And that's kind of our current scenario. That'll do it for today's update. Everyone have a fantastic day today.